Welcome to the Market Master Trading Podcast. This is episode 1. We are going to cover the current market trends and what to expect from the market moving forward. Thanks for joining me today. My name is Logan Guest. I'll be hosting this podcast indefinitely. I do appreciate you guys tuning in, and without further ado, we will get into our weekly newsletter. So, as an overview of what we'll be covering in this episode, we are going to discuss our approach to all-time highs, the break over all-time highs which occurred today, real earnings yield being deeply negative, the rotation away from big technology is a big thing to have on our radar. Margin debt to GDP has gotten out of control. The market breadth, it stinks. And insiders sell like there is no tomorrow in a insider selling year. So as we approach the all-time highs, or as I should say, as we crossed the all-time highs today, we are in what is called the Santa rally, which is the period of time after Christmas where the market rallies into the end of the year and the start of the next. We're staged for a rally into the end of the year. However, with the amount that we went up today, we are looking at a potential pullback into tomorrow's session, but overall, there's no reason to believe in the short term that we are going to be headed lower. With that being said, if you look at the first chart in our newsletter that is accompanying this podcast, you'll see that the slope of the trend in the S&P 500 from the COVID crash has been phenomenal. I should say ridiculous. The technical outlook corresponds with a lot of the other factors that we're going to be going over in this podcast. So stay tuned and make sure to follow along with the newsletter as we go. Real earnings yield is deeply negative. As we indicate in this chart was provided by thefelderreport.com, the Felder Report research. This is some great information that I'm just basically relaying over to you guys. We see in the real earnings yield that every time we have it go substantially negative, between 1 to 3% negative, and right now you should note that we are around the maximum, which is around 3%, and the years 1974, 1982, 2000, and 2008 were all corresponding with pullbacks or recessions in the broader market. Now, let's just be clear. This is not a paradigm shift. We are currently at record levels, and we can expect that poor performance in the S&P 500 will be in the near to midterm. Is there a rotation away from big technology coming? Well, Apple alone has been driving the market higher as it approaches a record-breaking $3 trillion valuation. We also now have Amazon and Tesla making huge bullish moves into the end of last week. FANG stocks are a massive component of the U.S. equity markets, and any implications in these mega caps would directly affect the broader U.S. equity market. Forward earnings predicts market performance. As we have discussed in prior issues, this phase of the bull market is going to be outlined by consistent earnings growth and quality of management. With that being said, Wall Street analysts are anticipating a sharp decline in aggregate year-over-year sales growth of top 5 holdings of the NASDAQ. This is shown in the chart on the accompanying newsletter. Margin debt to GDP has gotten out of control. The chart below shows us the level of speculation. The chart that is on the newsletter is showing the most speculation in history. This is sentiment of a overly bullish and bubbling equity market. It's hard to justify any rational positioning in majority of the tickers in the market, and we will look to energy precious metals, and financials for strength in the mid to long-term time horizons. The market breadth stinks, and what I mean by this is the breadth of the market has been very poor, with a large concentration of stocks being very weak and a small concentration in the largest of the NASDAQ basket, as we have discussed already. Majority of the stocks are trading below their 200-day moving averages. If you take the top 5 stocks of the NASDAQ out of the index, the NASDAQ would have lost 20% year to date instead of actually returning 26.37%. Insider traders have taken note of all of this. Insider traders have sold more assets this year than any time in history. CEOs like Elon Musk, Mark Zuckerberg, and Jeff Bezos, among many others, unloaded their positions throughout the year as the market added $1 trillion in valuation from quantitative easing and from retail investors. Concerning to say the least, especially as the majority of stocks are now in technical downtrends. One could say we're in a ghost correction as we approach all-time highs. Now, if you liked what you heard, please support the podcast by giving it a rating of 5 stars and share it with anybody who you think might find value in this content. Join the Market Master trading community with the link in the newsletter. If you don't have the newsletter, go ahead to my profile on either Twitter or Instagram at marketmaster_LG. That's marketmaster_LG. My name is Logan D. Guest on most social media platforms, and you can find a lot of content and value from my YouTube channel as well. So feel free to follow me and subscribe on all of those platforms. We will be getting more and more in depth in these podcasts and bringing on guests. This is just the very first episode. Thanks for listening, and thanks for following along with the accompanying newsletter. I hope to drive as much value to you guys as possible going forward. So cheers to you, and without further ado, have a good rest of your days.